Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, May the 4th, the year 2020. Let's talk trading, brain management, part 3. Now, just remember, fellow traders, these videos are for educational purposes only, and your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you place a trade, always have your risk management in place. You decide before the trade how much you're willing to lose on the trade, and you set your stop loss and position size accordingly. And that brings us to the topic, brain management. And I've got WALMAL on the line.
Hello, guys. I hope you've had a profitable day. It's been a crazy day for me, but hopefully you guys are doing well.
Yeah, and I can see prices kind of reversing on us. Did you already get out of that trade?
I didn't. I should have, but I did not.
So
my rules said to stay, and so I did stay. But at the same time, I had a feeling that it was going to go against me. But that's trading sometimes.
yeah. So on the brain management, we were talking about, what were we talking about?
Well, the last time we were just talking about, why is it so easy sometimes to go and stay in things, and other times it's so difficult, just based on what's happening in front of you in terms of the chart and what's going on in front of you. And the reality is, if you got everything set the way that your rules are supposed to be, we should be able to take that and take it out of our mind and just put that aside, because we know in the long run we will be fine. But that's hard to do.
What's the reason it makes it hard for you to do that?
Because I don't like people, not people, but I don't like the idea that I'm in profit. Like a few minutes ago, I was just in profit with about 4.5 pips, and now I'm sitting there with only about a 1 pip profit, and that makes it hard because it just drains on you. Like, you just saw 4 pips go away, and if you're trading with any type of account size, that's money, and that's the thing. That's money. It's being taken back by the market, and it's just. But at the same time, that at the end of the day, if you follow the rules and follow it, you should be okay, But the problem is we have all these things in place, and our mind just wants to go and. It just doesn't want to go and adhere to the rules, or it doesn't. We start having all types of what ifs come up in front of us, and next thing you know, we're trading outside our plan.
Yeah, and you had mentioned earlier when we were talking on the phone, you had said something to the effect that you just don't like losing. You just don't want to lose the game.
I don't. I mean, let's just from the competitive point of view alone, I don't like to lose the game. But at the same time, it's sort of like you play baseball. You get up there. A absolutely Hall of Famer goes and has a batting average of 333, which means that you're talking about he only gets a hit on 1 set of every 3 times, and he's considered to be a Hall of Famer.
Yeah,
well, here in this.
And actually, the thing about baseball is, if you think about it, every time you enter a trade, you can think of that as an inning, and either you score runs or the other team scores runs.
That's exactly right. But the only thing that really matters is what is the outcome at the end of 9 innings.
Yeah.
And that's what takes us out, I think, again, in terms of our brain management, because what happens is, imagine if you're playing a baseball game and you're down 3-0 and it's the first inning. Do you take yourself out of the game? Do you quit? Do you walk away? Of course not, because you've got 8 more innings to go and make that up. But you got to walk into those other 8 innings with the right attitude and trading your plan. And in baseball, playing your plan.
Right.
You have to go out there and play your plan.
Yeah, and the thing is, you have to react to what's happening. If you're at the plate, you got to react to the pitch coming to you. If you're out in the field, when the ball's hit, you have to react based on the situation.
Oh, absolutely. And if you're not doing that, we were just talking earlier about how I missed a trade because I just wasn't paying attention. And I'll admit to you guys out there in YouTube land that I'm down for the day. But if I would have taken that trade that I should have taken, well, I would have probably come really close to making my core for the day. And this trade that I'm in right now and that I'm battling with, I wouldn't be in it. I wouldn't be feeling this brain pain that I'm going through right now because the trade, the trade is, I'm up right now, but not enough to go and make up for my loss for the day so far.
Yeah, like I said, what's on the screen, pain does not come from the market. Pain comes from your reaction to the market. And so
right.
It just somehow, as I think I just mentioned in a previous video, is that you have to just basically switch off that part and just say, I'm focusing on the process. So long as I enter when I'm supposed to, I place my stop where I'm supposed to, the outcome of this trade doesn't matter to me. What matters is that I did the process, I traded my plan, etc., etc. Now, of course, we all want to win. We want that trade to be positive, but if it stops out, it stops out.
Yeah,
and it's like, move on to the next trade.
Right, and I've said this a bunch of times here on these videos. A good trade is not a trade that's profitable. A good trade is that you followed your plan. A bad trade doesn't mean that you lost money. A bad trade is when you don't follow your plan, and that's what we have to go. If you want to go and mess with your brain on that side of the equation. Did I go and do everything I was supposed to do? Did I go and enter when I was supposed to enter? Did I exit when I was supposed to exit? Did I stay when I was supposed to stay? And that's what makes it, a good trade or a bad trade. It's got nothing to do with your profit and loss column. Now, of course, at the end of the day, that does matter. But the thing is, your trading plan, if it's a good trading plan, it should keep you in profit. Maybe not every day, but at the long term, it should keep you in profit.
Yeah, in fact, I just pulled up the WALMAL chart here with the M5 candles. And so we can see what's happening. And one other thing about that WALMAL is what's so easy to do is basically do some revisionist history. Say you exit a trade, you got stopped out. Then you go back and you look and you go, oh, well, I should have seen this or I should have seen that. And the reality is, if you followed your trading plan, you weren't looking for this, that. And then there's a tendency to start wanting to monkey with your plan. And we had talked about curve fitting earlier
right.
today.
And that is so easy to do because next thing you know, you're trading the reasons for your trade. You're changing the reasons for your trade.
Right.
And now it'll get you in trouble, especially if you're trying to do it while you're in a trade.
Yeah.
And essentially, you get into a trade, your trading plan says to put your stop loss here. I've seen so many people go and take their stop loss and now start moving it down. So it's out of the way, so to speak, because, I know it's going to turn here. It's going to turn. I know it's going to turn. Well, what if it doesn't? Now, instead of going and losing 10 pips on the trade, you've now lost 15 pips or 20 pips. Now you got a mess that you got to go and trade yourself out of.
Yeah, tell me about it. Yeah, and so boys and girls and non-binary traders here, you see, WALMAL had said something that, we're looking at these 5-minute candles, and he says he doesn't take the first one. So you see here on this very first one, there was a move down, you skip it. The second one paid off. And then here, you can see there was a trade to the top right here a couple candles ago, but that was the first time at the 30 line, so he wouldn't have taken that. And the other thing is that he doesn't like trading past the half hour. And I tease him about it all the time. I say, hey, it's past the half hour. You weren't supposed to take that trade. But I don't know if that's really fixed in your plan or not.
It's not written in my plan. It's just that I just don't like it. And so I probably should make that part of my plan, because if you're not comfortable trading at a particular time, you shouldn't be trading. I mean, you need to be comfortable trading whenever you're trading. And if, there's something in me, some type of version in me that I see that 30-minute mark, I start making poor decisions because I don't like being in trades at that time, and so, you need to go and pay attention to those things. That's the psychology of trading.
Yeah, and so it's like, sometimes I think I can be a bad influence on WALMAL because, see, I like trading that last 15 minutes of the hour because a lot of times there's just a lot of price action happening, a lot of movement. But he likes to sit that out. I guess
I like to know what the direction is. I don't like all this back and forth nonsense that happens sometimes in that last 15 minutes.
Yeah, but like I said, see, yeah, I'm more of an action junkie. I think he's.
And the thing is, there's a lot of money to be made there. It's just that it's just not my style. So
Exactly.
Okay. Know that and move on. And if it is your style, jump on it. Make some money there.
Right. Exactly. And so, let's see, looking at the rat zone, I think I mentioned this just in the last video. You can see here we were at the 25. We left the standard rat. Smart rat zone was down here at 17. And you see how price kept sticking its wick in there and then it was reversing. So just taking any one of those trades there would have been worth about 10 pips at the moment. And that's just, you can say that's hairy hindsight, but we do this every day. And so at this level, 35% of the time price is going to close above where it is based on close minus low over the last 250 days.
So knowing that gives you a pretty good statistical advantage of knowing what to do. Doesn't mean you're going to win every time. It just means that over time you will.
And so I'm starting to think about, I need to have this, the rat zone indicator. I can turn off, the zones, but just to have this stat, or maybe just make it a little box somewhere, a separate standalone indicator, just knowing those percentages. Because because see, before, like in the old magnified market price, the whole idea was to know where price is because we know if it's less than 20. But see, now we can have a percentage as opposed to a pip number, and it's just like, do I like those quote unquote odds? Those statistical odds.
Right. And that's the thing. All we're doing is we're playing the statistics and trying to take those statistics to our advantage. That's all we're doing.
Yeah.
Because over time, if you take the trades, you will come up on top. Now, I'm down for today, okay? But that's okay because you know what? On Friday, I was up much more than I'm down today. So that's okay because in the end, the statistics, once again, are proving out that I can be down today because Friday I was up. Tomorrow, hopefully, I'll be up as well. So, in the end, that's what all we're trying to hope for is that in the end, we're constantly going up.
That's the whole idea behind trading. So, and the thing about it is, see, now we're at the 40% level. So 60% of the time, price is going to close above this level. And you see 58% of the time, if you're looking here, price is going to close below the red rat level. And as I explained in the other video, these numbers should not be 100% for the simple reason the rat zones are different sizes. And we're looking at so we're looking at, rather than a fixed length, we're looking at a length based on how many samples we pick and what percent of those samples are below a certain point. So in this case, 58% of the time, price is actually 58% of the time, or now 61 is going to be up here. And as you can see, price is pulling back. So that's about it. Those 15 minutes go fast, fellow traders. Once again, feel free to ask questions. But if you need to know more about the rat zone, the wick zone, or any of the zones, I've put out a ton of videos. Just search for that in the search bar there. And I explain exactly all the statistics, how I came up with it, and how to trade it. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And remember to subscribe and click like. And also share the video on other trading forums. You know, spread the news. TheRumpledOne signing out.